Hi, Rodrigo. Thanks so much for joining me today.
Thanks for having me.
Well, I am so excited to talk a little bit about your career in I think like what is such an interesting business line and skill set, as well as, the work that you're doing at Valley Bank. But my first question for you is how did you become a banker? And tell me one interesting or fun fact about you.
Yeah, I sort of like landed here somewhat accidentally.
Okay.
I've always been in financial services, but I guess at this point, maybe not that new to banking, but I've been in banking for around 6 years now. Before then, I worked in consulting for a while. I also run a startup accelerator for a little bit, all within financial services. So I got to see
Sure.
how different banks worked, how different types of financial services companies operated, including fintechs and the like. And I frankly just started getting very interested in this problem of how do you get banks to work with startups and what are new and interesting ways for those two types of companies to figure out interesting ways to solve problems for end customers.
Yeah.
And I actually got into banking to do partner banking for that reason. So my whole experience within banks has been partner banking related just by virtue of being super interested in that specific problem.
Yeah. I didn't realize that you're so new to banking, but it's funny because 2020, 6 years ago, is probably like a great time to very specifically do partner banking
Yeah.
because you've maybe seen some of the legacy approaches, the legacy problems, and then there's I think a lot of new technology that kind of comes in around 2020, as well as I think the pandemic, and then there's a significantly more interest from banks that weren't the kind of the legacy banking as a service, partner banking banks, right?
Yeah, totally. And I think like partner banking and banking as a service is sort of like one specific way to tackle this broader problem. But you were also, I think, asking about something just interesting. I don't know if there's a lot of stuff that's interesting about me. I'm a pretty boring banker, but I did a lot of work in Latin America as well.
Okay.
Um,
Oh, yeah, that is
I'm
very interesting.
I'm originally from Mexico and I actually started sort of like thinking about this as I was doing work for a very large mortgage entity in Mexico.
Okay.
And there was a project that I was involved in where that entity, which has roughly 60% of the market in the country, started working with the startup
Okay.
to improve their servicing capabilities. And anyway, that sort of like got me going on thinking of like, okay, is there sort of like a model here where like a startup can build like more front facing applications and have a financial institution in the background that does the balance sheet management, the risk management overlay. And that sort of like also coincided with what you're mentioning, like
Yeah.
2020 and seeing like that whole boom in fintech investing and different types of models that became suited for a banking as a service like function.
Right. And, I think sometimes like working in financial services, covering US banks my entire career, living in the United States, only using US banks, I think one, most people have that experience if they live and work in the United States. But I think what that can do and what that I've realized, especially when, I was reading Fragile by Design, was that not every and like you kind of know this, but like not in the way that it was explained to me, but like not every country has made the choices around their banking and financial services system the way the United States did. And that's maybe a function of government, it's maybe a function of founding, it's maybe a function of the stakeholders. But th- but like now in 2020 or 2026, like you see the banks in other countries, and then it's actually pretty easy to assume they're like us. Like their banks are like our banks, or they've got just as many banks as we have. And so the work that I've kind of done over time to learn about like how other countries have arranged their banking system, and then to ask like, okay, well, and I hate to be like this, but like if Mexico can do it, if Canada can do it, if Europe can do it, if South Korea can do it, like I actually think that that's more useful for us in the United States as we do or try to answer any problem with our financial services system. And I'm sure maybe you kind of get to have that like benefit of just having lived, worked, been on both sides of a banking industry in another country. And then when you talk to people like me in the United States, and then you're like, that's just not how other countries do it, Kia. Like you're just expressing, you're saying something like it's true and written in stone and it's physics. And what you're actually expressing is these were political decisions, or these are decisions that came from like 100 years ago that you're just living with today, but you don't know that, right? But you have the benefit of having that lived experience in a way that I don't.
Yeah, and it's super interesting for those reasons, right? Like the structural foundation is like actually pretty unique in the US compared
Right.
to other countries.
I've learned.
Yeah, if anything, like the US is more of the outlier in that regard.
Right.
Um,
Right.
but it also, leads to a lot of innovation. And I think the fact that there are so many banks here that are trying to figure out how to stay relevant and how
Mhm.
to build new and interesting product propositions for end customers is also pretty unique, and special about the US. So there are obviously pros and cons.
Yeah.
Get certain things done here takes a lot more time. In Mexico, there was a real-time payment adoption a while ago, and
Stop it. Don't tell me
uh,
don't tell me about these things.
and that's still not a thing here. But at the same time, like you don't see the dynamic like startup and fintech ecosystem that you do see in the U.S. and many of the
Yeah.
countries.
Okay, so you said that in 2020, there's something about partner banking, embedded banking that convinces you to become a banker. And that's so interesting because, right now I feel like the overall talent flows is less toward into banking, especially like when we think about more like kind of Main Street or community banking rather than like the high finance, Wall Street investment banks, hedge funds. So, what appealed to you about partner banking back then? And then what kind of skill sets do you think a partner banker needs, especially when we think about the other sets that make someone successful in banking?
Yeah. So right before I started working at a bank, I was working with startups at an accelerator. And I saw that many of those startups needed to work with banks, and the banks also were looking for startups to work with. So the interest sort of like stemmed from that, just seeing
Sure.
firsthand how there was an opportunity there. The whole partner banking space was not necessarily new. You had banks like Bancorp that had been doing this for a while.
Right.
There was already stuff happening, but I also realized that these were early days,
Hmm.
even if banks like Bancorp had been doing that for around 10 years, and there started to be a lot more venture capital flowing into the space. So all of this is a convergence of circumstances happened at the time,
Right.
and that's what sort of like got me in there. And as far as skills, I think it's really sort of like being able to operate at that intersection that
Mm,
is difficult. When you work at a bank, I don't mean this in a negative way, but you do need to learn how to operate inside a box in certain circumstances. And then when you work with startups, you need to be able to think outside the box and be
right.
creative. So being able to do both, I think, is at a very general level the main skill that you need
Yeah.
to do this well. There is this, very subtle skill that I think is important in being able to pace yourself in a certain way, think creatively, but also check certain boxes,
Right.
and abstract sort of like the complexity from the bank away from the startup, but at the same time make the startup that we're working with or the technology company understand why certain things are important for the bank and making
Right.
the bank can see and provide oversight properly. It's something that you just continually learn about.
Yeah.
And now that I'm at Valley, it's a different environment here, and
Right.
we also need to learn how to adapt not just to working in a bank and interacting with startups, but also learning how to work within a specific bank and how that bank thinks about things and
Yeah.
risk appetite and so on and so forth.
I think when you were describing the box, in the box and out of the box, I was thinking of like osmosis and like just being able to move back and forth between these like two environments. But yeah, I actually, like obviously a big theme in banking has been like the expansion or the permeability of the supervisory perimeter, right? Like what's allowed in and out, and so like you've worked at other banking as a service banks. And I did not realize Valley Bank was interested in partner banking. And we'll talk about some of the reasons why I think Valley is such an interesting, I don't want to say entrant per se, but what I think they kind of embody. Tell me a little bit about Valley Bank and then how Valley is thinking about partner banking, the business, their ambitions. I guess, especially, thinking like it's 2026. We've gone through like kind of actually a couple of waves of
Yeah.
partner banking.
Yeah, I mean, this goes back to what I was telling you, even going back to 2020, and seeing that Bancorp had done this for a while, Cross River had done this for a while, but it was still early days. I think it's still early days right now.
Oh, interesting.
And
It's like kind of, I don't know, isn't like almost 10, 20 years old?
yeah,
2016,
sort of.
2014, 10 years old.
Sort of. But I think it's still an ecosystem that's maturing.
Okay.
And in that regard, I think it's still early. So, going back to your question about Valley, Valley has been doing partner banking for a few years already, but within a fairly contained use case. So the bank, maybe just to give you broader context, Valley is probably the largest bank that does cannabis banking, and
Oh,
which
wow.
I think is
Yeah.
pretty interesting on its own. And there was a partner banking initiative that was launched around like how to work with technology companies that were doing payment processing in cannabis that needed a partner bank.
Right.
So that had been happening at Valley for a few years. And there was always this initiative and the intention to grow the line of business, expand to other use cases. And that's what we're doing right now.
Yeah.
And that also is part of like a broader, more holistic approach to serving players in the innovation ecosystem. So Valley, I don't know if you knew this, but Valley has a ventures fund. There's a Valley Ventures team.
Okay.
There's a tech banking team.
Mm,
Already works with a number of startups, and partner banking fits within that broader context where
right.
looking to develop this sort of like monoline partner banking function. It's meant to be part of an initiative that allows us to work with startups across the board, right? We can invest in startups, we can bank
Hmm.
on the corporate side, and we can also be their partner bank if they have a partner banking offering. So that's really where it fits strategically. We're focusing on new ways to grow deposits,
Yeah.
revenue, and partner banking within sort of like the context that I'm telling you fits
Yeah.
nicely into what the bank is doing strategically.
Yeah, I mean, I think that's so important to think that, I think one of the things about partner banking, especially when we saw a lot of community banks enter it, is it kind of seemed like, in some regards, like a monoline play, like, a way to gather deposits. So we're just going to find this group of companies that needs a partner. Maybe they'll offer a debit card or something, and that's all will be to these companies is a place for them to put
Mhm.
their end users funds, and then we'll run debit card and get interchange, and it's like that's it. And I kind of understand that a community bank under 10 billion may not be able to offer more services on the corporate side or be an actual investor, outside of like a fund or something. And it makes sense that Valley, with its size, is able to one, have these customer relationships with these fintechs before they maybe need the partner banking components of the business. But also, like, that makes sense from a product offering standpoint, is like, well, we know you need this. We know you need to accept payments. We know that you are holding customer funds for whatever reason, in your business. So you might as well get it from us versus going from somewhere else, right? And keep it all kind of in house. Um, so yeah, let's talk a little bit about, like, partner banking has been the domain, at least for the last like wave of banking as a service of the sub $10 billion banks, and Valley is 66. You talked about why this makes sense for Valley and how it was a natural evolution for Valley. But do you think there's a broader argument to be made that, banks above 10 billion should consider doing some component of partner embedded banking?
For sure, and frankly, that's the reason why I'm here. But this is even going back to your question about where we are, like in partner banking, and whether it's early or not. I think if you look at why sub $10 billion banks have mostly been the ones in the space, that has really been a function of early business models really being built on top of Durbin-exempt interchange. So going back to 2020, if you remember, everyone thought that you could build like a neobank for whatever
Oh
second.
yeah, neobanks. What a time.
Yeah, and have like a debit card that would allow you to monetize that customer base. If you work with a bank that's sub 10 billion, they can give you Durbin exempt interchange, or they can share Durbin exempt interchange with you. So the interchange pool is richer, and therefore it makes sense to work with smaller banks for that reason. And small
Right.
sometimes also be nimble and offer other advantages. But what I think we realized, and that took a few years, is that building a business purely on top of Durbin exempt interchange is extremely difficult. So that wave of companies, with some exceptions, mostly went away. Like most of them are no longer around. And
Right.
again, I don't mean to say that you can't do stuff with debit programs, but it's definitely hard. And
Yeah.
at the same time, what started happening is you started seeing vertical SaaS companies and other players that maybe did not necessarily have fintech first propositions, that were embedding accounts, that were embedding other financial services products, and those companies didn't necessarily need a debit card.
Mhm.
And then, you're in a situation where some of those companies are working with smaller banks, but they don't really need the Durbin exempt interchange. They need a bank that can really scale a program that's going to grow deposits in the hundreds of millions or billions of dollars.
Right.
Right. And I think that's where a bank like Valley is a better option. And I think that's where you're also going to start seeing more banks that are larger get into the space. Like Valley is not the only one, that's making a push into embedded finance, right? There are other banks around their size and some larger ones that, in their own way, are looking for partner banking like initiatives to either grow deposits or grow fee revenue or acquire credit card customers, or whatnot. So I do think that's sort of like the next cycle of that ecosystem and that business model maturing. And that's where I think we're still early in a way. Like the model is maturing. And frankly, if the ecosystem is going to drive growth in that level of magnitude, it's just the natural evolution for larger banks to start getting into this in a more earnest capacity.
One of the things that I picked up on, and I mean, I completely agree with you, even and I as someone who just, like, doesn't use her debit card ever, I fully did not understand that play, and, RIP neobanks. So I kind of understand why these, like, bigger banks didn't feel as interested maybe in banking as a service initially, given the Durbin interchange issue. But I always kind of thought that a larger bank, one, the larger balance sheet, if one of the hazards of banking as a service was what if it's successful? And what if it brings in so many deposits that it becomes kind of a concentration issue,
Yeah.
or it can become like, with all of these accounts or with all of these payments, right? You have like reconciliation complexity, or you might
Mhm.
have some like administrative complexity just kind of tied to a successful program. And I've always felt that like bigger banks probably just had a little bit more experience with some of those items. Maybe bigger banks had more experience with some of the compliance with them, or there was maybe some more administration. Maybe they were just better at like certain escrow accounts, or like just different types of specialties, as well as like maybe they had just had more technology available so you didn't have to make all these investments or whatever. And I just think about one of the appeals of the middlewares coming in was like, we'll do some of the work for you. And I was like,
Yeah.
if you can't do the work, I hate to be like this, but like, you just kind of can't do the business.
Yeah, you
Like,
shouldn't be in the business.
right? Like, if that's like part of the value proposition, then that like tells me that you're just not ready to do it. And like, also, and like, if anything, the middleware should be kind of a redundancy element. But can you think of like some other lessons that we've taken from kind of, the first and second waves of banking as a service that Valley is definitely like kind of paying attention to, or things that like, having kind of gone through the gauntlet, you'll like be able to do it better?
Yeah, many are the things that you just described. I think like the clarity is there, and I think anything here is unexpected. Um, to the point where if you're a bank that's doing this, you need to own the relationship with the
Shocker.
partner that you're working with, right? Like you just have to do that. You also have to own the back end processes, and you can
Yeah,
use vendors, right? Like you don't have to build everything yourself, but you do need to own your technology stack. You
right.
need to own the operational processes, the reconciliation. You need to know how things work in general. So that's how we're approaching it. I don't think a bank like Valley would have ever approached it differently, because that's
Sure.
the approach to any line of business that we would launch. But we're certainly being very intentional, because the thing that I think is tricky is balancing that, like having a very robust model oversight framework and tech stack, while at the same time um, making sure that that's suited to work with technology
Of
companies.
course.
I think that's really the part that, frankly, is trickier, because if you're not going to take shortcuts on the regulatory side or the risk management side, which obviously we're not,
Right.
then you do know what needs to be in place to support this.
Yeah.
But building it in a way where it's still somewhat nimble and
Mhm.
straightforward, and where you can work with companies that value and appreciate that, I think that's sort of like where the secret sauce comes in, if you will.
Yeah.
And we're being very, very intentional about how we do that. So that's frankly like the main thing that I think about every day. It's not, how do I do reconciliation, or how or that like the risk management folks are doing everything they're supposed to. It's more so, how do we make this very, very efficient,
Yeah.
partner friendly, and scalable. And I think that's again a hard problem, and not a lot of banks have been able to crack it. Many of the banks that have been doing this, have encountered speed bumps as they scale.
Mhm.
So we're building this not for, like the next 6 or 12 months, but really to be able to scale it over the next few years and make it a really meaningful business for the bank.
Yeah. This is not your first time building out a partner banking program. And I know, thinking about all the technology that's changed from 2020 to today. One of the things that, again, I always thought about with partner banking, especially for the banks that are under 10 billion in assets, is that some of these banks might be the largest banks in the country by customer accounts, or like, end users ultimately. And that JP Morgan certainly has a lot of customers and has a lot of assets, and probably has invested in both of those as they have both grown. But again, if these programs are really successful for the community banks, they might have like multiples more of customers than they've ever had before. And I was thinking like, there's just so much more compliance, and maybe technology needed to manage those processes that have just exponentially grown. Um, how has technology changed embedded banking even in the last 6 years? And how do you see, if, to call out one, artificial intelligence kind of, being either a tool or, a challenge in the partner banking space?
I mean, technology has changed a lot, and technology, I think, is one of the core components of being able to build out like a function like this in the way that I described it. Because you're working with a partner to serve an end customer,
Right.
that end customer is a bank customer as well. You need to be able to demonstrate that even working with a partner, you're providing the same level of oversight. You know, you're really owning that end customer relationship, even if the partner is doing the front facing component of the ongoing servicing and support. So that becomes very heavy from a process standpoint, right? Like you need to be collecting a lot of data, you need to be collecting
Sure.
a lot of documentation, you need to have people do monitoring and testing and ensure that everything is being handled correctly. And if you don't have the right technology to do that sort of stuff, it becomes very difficult to support it because then the business for the bank becomes unprofitable.
Right.
Your
Right.
go up very quickly. Your revenues do not allow you to make it a good margin business. And I think that's where artificial technology is extremely helpful, specifically in the partner banking domain. There
Mhm.
are a lot of companies that are emerging that are using artificial intelligence right now to automate third party risk management, for example.
Right.
There are companies that are helping banks automate at least first level alert dispositioning when they're doing transaction monitoring.
Mhm.
There are other companies that are also helping, just automate oversight of customer facing materials and websites and advertisements so that you
Right.
really need a human reviewing every single thing.
Yeah.
So I think by virtue of having those tools, you can make your partner banking function more efficient, cleaner, easier for the partner to work with you on,
Yeah.
while at the same time, having a robust like oversight structure. So I think
Totally.
that's one, and
Yeah.
then the other aspect of it is with the partner's own offering. I think there are new flavors of technology companies are using artificial intelligence, for example, to automate accounts payable and accounts receivable processes.
Yeah.
And those companies also have an opportunity to embed like a deposit account or a payments product. And for us, it's also very interesting to think about how we can partner with companies like that
Yeah.
to embed Valley accounts or Valley payment features in a way where the partner's sort of like offering is more robust and includes that APAR automation in addition with a financial services overlay.
Yep.
And for us, obviously, acquiring a customer through a channel that has that sort of offering also allow us to jointly be very interesting for certain segments that may otherwise not have an option to have both banking and
Yeah.
automation their workflows in the same place.
Yeah. I mean, your answer, I just think there's like almost an inevitability with your answer. And I kind of increasingly think about like, you know, I'm not gonna talk about it today because I feel like I just truly don't know enough, but, like, I think there's a desire for standardization within the partner banking space or the embedded banking space, and outside of, like, what anyone should or should not do, I think there's increasingly, like, just, like, a tech stack, like, kind of like a start I don't wanna say a starter kit because that's also kind of a bad pejorative way to say this, but that, like, if you're going to do this, if you're going to do transactions at scale, if you're going to do payments at scale, if you're going to do X, Y, and Z things at scale, there would just be certain types of technology capabilities you would want to make sure you have because they will happen at a rate that no human should can keep up with, and the limitations of human employees are such that the bank will incur liability if there isn't an ability to automate or like have that kind of transaction monitoring or the marketing or whatever. And so, you'd want oversight of those processes, but the scale of some of these programs and the amount of transactions and data that are happening, like it's just beyond what any team, what any bank could conceivably do. And then it kind of like, for me, I think all of banking is going to go in this direction. Like there's probably not a bank that is like, actually, I hope our accounts never grow beyond what we can hire for, right? Like I think that partner banking is always maybe like 5 or 10 years in the future of where just commercial banking might be, of where consumer banking might be. So you might want to think about, using the experiences of the partner banks and these business lines to test out like, hey, so should we just like should we apply this technology or this approach or this process to the entire bank itself, right?
Yeah, 100%, and I think that's what we typically see with those companies, right? When many of the companies of the types that I just described get started, they typically don't go and immediately start selling to banks. Like some of them do, but typically the approach is you go and you sell to fintechs that work with banks in this partner banking function, or you sell to those fintechs through banks that need it
Yeah.
to support the partnership. And as sort of like a next evolution of your go to market strategy, like then you start selling into like more traditional commercial and
Yeah.
consumer banking functions because of a couple of reasons, right? Like first, it's it's much harder to sell into those lines of business because they already have their way of doing things. It's
Yes.
harder to deviate from whatever's already in place. But also like you need to demonstrate that your technology is already proven, and it's typically easier to do that when you work with another startup that's both more receptive but also needs like
Needs
the
it. Yeah, they're
that
not hiring for it.
technology. Exactly. So that tends to be the route. And frankly, as you're saying that, that's obviously, another benefit of a larger bank, like having a partner banking function. Like it can
Yeah.
also, in addition to helping you grow deposits and achieve certain very specific business outcomes, it also helps you look at new technology and think about technology adoption differently. Which going back to my one of my first answers
Yeah.
is part of what Valley is doing, right? Through the venture side and
Right.
other initiatives that we have to adopt those technologies. Because we're not only investing in startups to, generate a financial return. That's obviously part of it. But, as a bank, we're investing in startups because we want to be able to work with those companies.
Mhm.
And certainly to what you just said, partner banking allows us to do that maybe in a faster way,
Yeah.
maybe in a slightly different approach.
So it sounds like Valley Bank has this whole ecosystem of firms that it works with through a variety of different ways, and then partner banking or embedded banking is just one of the ways it works with those companies. But I know that selecting the right partner is like a really really important part of embedded banking, and we've seen kind of some of these partnerships go awry, or even a wind down in the best way is still disruptive and can be hard for both parties, especially like it's not like a bankrupt company has a lot of resources anyway. And then now I'm thinking about, there's a certain set of fintech partners that have been so successful that they are now considering getting their own bank partnership. So, there's kind of two sides, right, to this partnership. There's like, what if it goes poorly? What if it goes well? So, how are you thinking about the universe of potential partners that Valley could work with in the embedded banking side? And what have you learned about selecting a good partner, and how to like not form not just a good partner, but have a good partnership, a good working relationship, like one that isn't gonna like surprise and pull a bunch of deposits out or whatever.
Yeah, I mean there are multiple angles to that question, but let me try to unpack that a little
Yeah,
bit.
it's a really easy question because for a really easy topic.
Yeah, yeah, as this space usually is. But maybe to start with, one of the things that may be top of mind right now with what's happening with fintechs hitting their own charters, the way that I look at it is there are companies that are maybe, for lack of a better word or to oversimplify, fintech first, right? So you have
Yeah.
your neobanks in that category. And when you look at that type of business model, at least to me, it was very hard, even, back in the early days, to think about a company like that at scale,
Mhm.
not either getting a charter or being acquired by a bank
Right.
because like their business model is so financial services focused that at some point they would likely outgrow the partnership
Right.
structure. And now the question was like, well, would they be able to get charters? And I think back then the answer was like, well, probably not. Like no one's
Yeah.
gonna allow like a neobank to get a charter. But now that has changed, right? And now we're seeing many of those companies get charters, and some of them get acquired, right? Like Brex just got acquired by Capital One, as an example. So for me, that's a starting point. And I think when you get into this business, you need to think about like, do you want to, have partnerships with companies that maybe at a certain stage may not require you as a bank partner and may outgrow you?
Yeah.
Or do you want to work with companies that maybe are more, let's say, vertical SaaS companies that are never going to get a charter, but have a very good model to also overlay some sort of embedded banking component. I tend to like the latter more so than,
Yeah.
but I think it's really depending on what you're trying to accomplish. And to some extent, like building out some diversification there. You don't want to have a portfolio that's like exclusively companies that at some point may get a charter and then suddenly, have concentration in that regard. So I think that's one very important strategic consideration.
Mhm.
And the other one is making sure that the partnership is structured in a way where it's mutually beneficial for both parties. Right? It really needs to be a two-way street. So if as a bank you are providing value,
Right.
and you are part of the long-term strategy that that company is building towards, and not just sort of like a disposable component there,
Mhm.
whether the partnership evolves and changes or not. You're set up for success. When those things don't happen,
Yeah.
I think that's where like the wind downs, the transitions, like the sudden loss of deposits, become like a more recurring thing. And I think we're going to see a lot of that now,
Yeah.
uh, from banks that do have a lot of exposures to companies that in a year or two may no longer need them.
Yeah, I think your point about it's funny because I so often think about banking as a service and the waves of banking as a service from the bank side. So the types of banks that are offering this, the way that they're offering it, the problems that happen, how does that impact the bank? But I think you're making a really interesting point, which is that um, the broader corporate innovation economy is also kind of going through its own, waves of iteration. And there's a subset where maybe like, I don't know, 6 years ago, 10 years ago, that company, if it existed, did not want to offer an embedded banking product. It was just kind of like, no, we're good doing our current iteration. And then as, time has passed, as technology has passed, as maybe how consumers interact with money or different companies has evolved, um, they might now be like, actually, we should probably have some sort of financial pr- service or product embedded in our offering, and we just don't need to send our customer to. We don't want them to pull out their debit card or credit card, or we don't need to send them to another website or whatever. And it just makes sense for us to do it, but we don't need to. We don't need to like it's just not going to become their whole identity. It's an offering as part of it. And maybe like hopefully those companies kind of understand that there are banks that are able to partner with them for that and have like whole, support for that. But it also occurs to me that there will be people like you and your team who have to get really good at identifying who those companies are because they don't know that they're in a subset or a whole cohort with other companies, and you have to kind of go out and like I think about like sometimes I think about like Bill. I'm now in a Bill apartment, but how did Bill like go out and realize like all these apartments that are managed by like I don't know 3 or 4 national apartment management companies had this like rent accept payment acceptance issue and then was like, hey, we'll work with you. You know what I mean? Like, and I just think that like you're just gonna have to find all of these different places and businesses around the country that are like, hey, would you like to do payments or offer some like light banking services, but don't actually want to become a bank or become a neobank, right?
Yeah, and it happens in a number of different ways. I think you're right in the sense that sometimes, like, you have to also be creating the opportunity that you're going after.
Yeah.
So, like, let's sort of, like, stick within, like, vertical SaaS, right? Like, you may have a company that, has, vertical SaaS for, like, SMBs in construction, right? Just to
Yeah,
use,
right.
like,
Yeah.
and they may realize, oh, like, I can offer a business bank account to these SMBs within my platform, and
Yep.
that's going to allow me to see their spend and to be able to provide them with more visibility and better reporting that's going to be helpful for them. Or I may automate their tax filing or whatever it is,
Yeah.
and then come to you, and you're the bank that can do that for them, and that's how the partnership starts. Or the opposite may happen, right? Like, you may be looking at a company like that, and making them realize that there's an opportunity that they can pursue.
Yeah.
So you sort of, like, need to be prepared to do both things, both sort of, like, capture, like, an opportunity when, like, the company that's doing that is already thinking about it, but then also where there are opportunities, and also where you see models that you can replicate in something,
Yes.
be able to help them come up with the structure, the idea, the value proposition. And I think that's sort of, like, where, like, the true, like, partner banking aspect comes into play. So at least to me, it shouldn't really be this purely transactional line of business where you have a company that needs to process payments. They go to you, you set them up with those capabilities, and that's that, right? Like, you do need to think about, how do we make this partnership successful for both of us?
Mhm.
And I think even in sort of, like, what we're discussing right now, the bank can provide a lot of value in helping them frame this and understand
Yeah.
what opportunity is.
So I wanted to pitch to you a conundrum that someone had pitched to me, fellow, CEO at a partner bank. And he told me that he sees a tension between mature embedded banking programs, so like at the bank, and then early stage fintechs that are looking for bank partners. And he said that, like, I think the dynamic is that these established banks don't maybe want to work with, they would maybe want to work with these early stage fintechs, but they view the fintech as having more risk than like where their program is currently at. And because the fintech is new, like just on that basis, not that it's like also separately a crypto, no KYC fintech. And so for him, he's like, I just, it's not right for me. It's not right for my bank to do this. But like, if they get too many no's, then this fintech doesn't ever kind of get off the ground. Or like, how is a new fintech supposed to become an old fintech?
Yeah.
Right. And then it would be a good fit for my program. What are your thoughts on like kind of how, like, what he sees as a conundrum? And like, is this like an actual problem that banks need to worry about? Or is this kind of just like the thing that happens in the maturity, which is that, like, the banks that have been doing this for 6 years are kind of like should not maybe partner with a new fintech, but also like a bank that's been doing this for 1 year probably also shouldn't partner with a new fintech, right?
So I actually think it's more nuanced in the sense that, like, stage on its own doesn't necessarily drive risk profile. It
Okay.
can, it's
Okay.
in other things, right? But um, at least from my perspective, you can work with an early stage fintech to the extent that you feel very confident in what that fintech is doing, and to the extent that certain, like, mitigants are in place, because being early stage definitely, you know puts you in a situation where there are a lot of unknowns that you need to manage.
Sure.
So one of those, for example, is, am I working with, like, solid operators? And even if the company's early stage, but you're talking to a repeat founder that understands how banking works, how fintech works, et cetera, you may be willing to do it even if the company's early stage.
Okay.
I think similarly, in building out, like, a partnership like this, that there's going to be a need to grow a team, to build certain things, and that requires capital. So it's
Yeah.
to talk to an early stage fintech that has raised, $500,000 than one that has raised $10 million. So to me, like how much capital they have, who they are sort of like backed by, counts a lot.
Mhm.
The quality of like the investors that they have on the cap table. So when you look at all of those things, I think you can make an informed decision to work with a company that's early stage in a way where it's not necessarily going to drive undue risk. I think where it's tricky is where you don't have those things.
Sure.
Um,
Okay.
and I tend to look at that in a somewhat simplistic way. I don't think it's as different as venture investing in general, right? I
Okay.
think there are folks that will only invest in Series A, Series B. There are folks that are going to be focused on pre-seed, et cetera.
Mm, mhm.
And
Mhm.
I again, it's a very simplistic way to look at it, and it's not necessarily like the best analogy. But I also think that there are banks that have more, um, like have the risk appetite, and also have maybe the processes and the people and the infrastructure to engage with some of those very early stage fintechs,
Okay.
and those companies may be a better fit there.
Yeah.
And there are other companies that are going to be a better fit for another type of bank.
No,
So
I think your VC, your venture investing analogy is actually a really good one because it just helps like kind of understand the segments and then understand like the risk tolerances and then hopefully like, I'm sure people who invest pre-seed have like different expectations and invest different amounts than people who are like kind of further down or like investing in later rounds, right? And
yeah,
so, but also like, from the banking side, part of me is like, I like the going back to my initial thing, like this is just how we've set up our banking system. And like not everyone has a right to a bank.
mhm,
Famously in our country, we don't do that. And so sometimes that means that like the initiative as you've dreamed it up, just like banks get to say no to that, right? Like, and um, if you're interested in bringing on a more experienced founder or maybe like bringing in more capital or things like that, that's, certainly you can try that to see if you can get to yes. But at the same time, too, I feel like we have for a while I felt like I would say stuff about banking as a service and then people would be like, "Nah, it's fine." And then like now we just don't have that conversation. Enough bad things have happened in enough different ways. Like I know there's like one big one, but like other bad things have happened or things that like if you work at a bank you'd be like, "I don't want that to happen to me."
yeah,
Pray for it every day. But like we don't have to kind of talk about like the downside risk of and like the downside risk to the bank, right? Like and that certainly end customers can get hurt. Certainly the bank can get hurt. I would love to see some more of these fintechs maybe getting hurt, but in similar ways. But until we have that kind of like accountability, like I don't know if I think like banks need to kind of go out on a limb, given that this is already like this can be such a complex business line. Um, and it's still kind of new.
yeah.
And so, yeah, part of me is like, no, you just get to say no. You don't have a right to exist. So I feel bad, but
Yeah,
sorry, them's
and
the
yeah,
breaks.
and I think yeah, that's certainly part of it. If there's a company that's too early, it may not necessarily be a fit for you, at least at that point in
Sure.
time. But I think the selection question is one relevant one, and then the other one is, well, if you're going to work with a company that's early stage, how do you manage that relationship as the company grows and matures and as the
Sure.
scales? And I think a lot of the issues that we've seen are a combination of, maybe like a bank was working with a company that was too early stage, that, was too risky just in general as
Hmm.
they started. But then maybe like the bank and the program and whatever middleware was involved also didn't manage like how that program scaled, right?
Yeah. Yeah. There are
So,
other risks,
so
separate risks.
obviously, if you have a company that is early and they're just launching a program and they have a handful of customers and accounts, uh, at that point you can still like provide proper oversight, make
Yeah.
sure that they, yeah, grow the team appropriately, that they build out the right processes. But if you don't do that, as you're building out the program, and then the program suddenly has thousands or hundreds of thousands of customers and millions in deposits, at that point it's too late,
Yeah.
right? So I think it's both of those things.
Well, Rodrigo, I have had such a fun conversation with you. I love, kind of talking about banking as a service, and it's both kind of good and bad that it's not the giant thing eating up all of the banking headlines these days. But my final question for you is, what do you think the future of embedded banking looks like for banks, and then like on fintech side?
I think it's going to be a business that continues growing and evolving and maturing. I do expect more, traditional banks, if you will, to get into this space,
More
and
of the mid-size, more of the
more on the
yeah.
mid-size and even some of like the larger players in some capacity. So I think you're going to see, at least compared to maybe 2020, maybe fewer players but more quality players,
Hmm.
and I think that's good for the business in general. And I actually think a lot of the growth is going to happen in through at least tech companies that are not necessarily fintech first. So
Okay.
as maybe what we saw in the last 5 years was a lot of those sort of like neobanks and like, fintech heavy models. I think this next stage is going to create a lot of opportunities for like a true like embedded banking
Yeah.
offering where you're not necessarily trying to displace like a traditional bank, but you are looking for opportunities to truly embed a banking
Hmm.
within an existing offering through vertical SaaS, for example. And to me, that's interesting both for what it will allow banks to do from a distribution standpoint and for the advantages that it's going to create for end customers.
Well, thank you so much for taking this time to talk with me about your career and about Valley Bank's, exciting new business line, and kind of deepening the partner banking universe that you guys already have.
No, thank you so much for having me. It was a pleasure.